Hello guys, I'm Shreeya and welcome back to another episode of FinEase, a series where you explain finance with fun. In today's video, we will be explaining you the different stock market terminology. In this video, you will get to know what is stock market, which terms are important to ensure success in stock market. So let's get started. It does not matter whether you have any financial knowledge or if you have ever invested in shares. By the end of this video, you will know what you need to do to make money in stock market. So here is a handy glossary to help you out with 25 terms related to stock markets. Firstly, let's understand share market. Anywhere where you buy or sell shares. All stock exchanges across India are a part of the Indian share market. Any shares that you buy or sell outside the exchanges are also the part of this share market. The stock exchange. This is a specific facility where stocks are listed for sale or purchase. All stock exchanges in India are now digital and you can access them online through a brokerage firm. Over the counter. If you trade a security that is not listed in the stock exchange, you are making the over-the-counter trade. Let's understand what a stock is. Stock is a general term used to refer a certificate indicating ownership of a company, whereas a share is a stock certificate of a particular company. So if an investor says she owns 10 stocks, she is mostly referring to shares from 100 different companies. On the other hand, if she says she is buying 100 shares, she is referring to shares of a single company. A bull market. When stock prices in the market are generally rising, it is a bull market. Bear market. The exact opposite of a bull market is the bear market, where the stock prices in the market are generally falling. It is called the bear market. Order. It is a show of intent to buy or sell shares in a given price range. Let's take an example. You may place an order to buy up to 100 shares of company A at a maximum price of 80 per share. Bid. Your bid is the amount that you're willing to pay for a share. Ask asks the price at which you are willing to sell a share. Bid-ask spread. This is the difference between the amount people are willing to spend to buy a share and the amount at which the shareholders are willing to sell a share. A trade can only happen when this spread is resolved. That is, if the lowest price at which a share of company A is being sold is rupees 40 and the highest price someone willing to pay the share is rupees 38, no trade can happen. The trade can only happen when the bid and the ask prices match. What is a market order? An order to buy or sell shares at market price is called market order. It is advisable to avoid placing market order as the trade price can be very volatile. Limit order. An order to sell shares above a set price or buy shares below a set price is called a limit order. You should always use limit orders to trade shares. Day order. An order that is good only till the end of the trading day is called a day order. If the order does not get executed by the time the market closes, it would be cancelled. Good till cancel order. an order that will stay open until it is either executed or manually cancelled. Such orders may stand for weeks if no shares are available to trade in the price range specified. Liquidity. Liquidity refers to how easily a stock can be sold off. A share that can be sold off quickly, that is, has a high trade volumes, is said to be highly liquid. Trading volume. The number of shares being traded on a given day is called trading volume. IPO, full form, initial public offering. The first time a company offers its shares for trading on a stock exchange. Typically, you buy shares from the previous owner of the share and not the company directly. In the case of an IPO, you get to buy the shares directly from the company. Market capitalization. Market capitalization is simply the value of the company as per the stock market. That is, the current value of all its shares put together. Mutual funds. Mutual funds is a way of investing across a large number of stocks by pooling your funds with other investors. This is how you diversify your investment even if you have limited funds. Further, a fund manager takes care of selecting the right stocks to invest in. Exchange traded funds. These are mutual funds that you can trade like shares on the stock exchange. They usually track an index. Index. Index is a benchmark that is used by investors and portfolio managers to measure the market performance. Nifty and Sensex are such benchmarks. If your portfolio returned 10%, that may sound really good. But if the Sensex returned 12% during the same period, your portfolio did not perform very well. Portfolio. Portfolio is simply the collection of all the investments an investor has made. Lastly, trading. Intraday trading is all about buying and selling stocks on the same day so that all positions are closed before trading hours are over on that day. Lastly, let me explain you what dividends are. Dividend is a part of profit distributed by a corporation among its shareholders. When a company earns profit during a financial year, a part of that profit is usually distributed as dividends among its shareholders. Guys, now that we are at the end of the video, I would like to tell you all that this list is not exhaustive. There are many more terms that you will come across once you start investing in share market. Reach out to us for any help that you need. You should also find a mentor to guide you through the process of learning how to invest. By now, you would have got some knowledge about the share market and its terminologies. Thank you for watching this video. Do share, like